Going on to a question here from Reese. I'm looking to buy a push property for my PPOR in Newcastle, but since I started looking back in January, so we're now about 8 months ago, the market has moved significantly. The markets have grown a lot now. Is Newcastle still a buy in 2024? Which suburbs should I focus on? So I guess just a couple of things to unpack there for you, Reese. So I guess firstly, when we talk about a PPOR, how we want to live versus how we want to invest are two very, very different things. I guess how you're going to spend potentially the rest of your life, or, a property that you're going to hold for a significant period of time. I guess the location and how the property presents and feels should be the number one factor for yourself. Capital growth is nice to have, but keeping in mind if it is a PPOR and you're just using it as an equity sponge to essentially buy more investments, you're going to keep increasing your mortgage, all those kind of things. So it's just, I guess, understanding your overall strategy of why you want to go about that. The Newcastle area is somewhere that's still fairly high on the R-score if I haven't really looked too much into that one. The main reason being we don't make a whole heap of purchases there for clients, just purely based off the yields are a little lower in the Newcastle area. So if I go into, we might even include Maitland in that as well, because that's obviously in the surrounding areas as well. But if we go into, and we'll just put the approved locations in there. There we go. We can still see there's quite a few suburbs in the 90s, in the 80s as well. So it's definitely something that's in a buy window. I guess for yourself, Reese, talking about that, I think that affordability price point was somewhere that you were looking to be in as well. So if we're going to say maybe 800,000 to 600,000, where do we get to here? And have I got the yield filter still on? No, I don't. So in and around, I think we spoke about this last time. I'm going to butcher these pronunciations, so apologies to any New South Wales people jumped on. Rutherford has been somewhere that's been, I guess you can see here, Rutherford, we will sometimes get data swings in a month. So we always like to check where the LGA is as a whole. So Rutherford last month was actually at 91. We saw when we went before most of the Maitland, New South Wales areas in the 90s and 80s. So Rutherford would be one I'd definitely explore a little bit more. And Metford, they're definitely in the affordable locations. Canembit, again, all these are approved locations for us. And then you got Beresfield. Now, not a local, don't know enough and haven't done enough due diligence on my end to say that they're great buys to live in. But you can see here, most of the yields are in that kind of mid-4 territory, and keeping in mind at Ripehouse, we're normally buying above the median price because we're buying in the better streets, right? We're avoiding public housing and rent-heavy areas. So even though the suburb average might be 4.7%, most of the properties we look at will probably be in the 4.3s, 4.5s as a general whole there. But I mean, if to your question, Reese, is it still worth buying though? And I need to just get to the right tab. So if we're talking about this is for a PPOR, a long-term hold, we can kind of see the Newcastle area as a whole has always been somewhat of what some might say is a blue chip area, even though it's not really super expensive. The 10-year rolling average has been a 10% movement per annum. So they would be what you would expect in your northern beach suburbs or your northern suburbs in Sydney. Maybe you're in the eastern suburbs in Melbourne as well. So it's been a really, really strong and consistent performer for a long period of time. So if we're talking about this as a long-term hold, I don't think you trying to time your way into the Newcastle or Maitland area is something to be really too concerned about. And the other thing, just to be keeping your side on it, where we might see stagnation from a pricing perspective, when rents start to stagnate or vacancy rates start to stagnate, we're still not seeing really that for that area. Rents are still trajecting up, and I'm sure if I go in here in a moment, which I will, if we have a look into that location, I'm sure we're going to see pretty tight vacancy rates. So yeah, we're in the ones for most of that area. If we go down to Newcastle as well, pretty much the same thing as well. So we got some, I would hazard as a guess that there's probably a fair bit of apartments in here, and because there's a bit of this looks like some kind of, there's a river in there as well, so there might be some anomalies for that to be at 11%, but I'd like to just use the general as a whole. I'm seeing 1 or less, so still a buy, Reese. It's a PPOR, so it should be a long-term hold. It's not something you're going to flip over a period of time, so that's just definitely something that I'd keep persevering with. But thanks for submitting your question.